CTM, mic check, 1 2 1 2. We're about to get to it. We got a strong session ahead. This is coming off of yesterday's summit meeting. We had a 4-hour plus summit team meeting, and all I could say is just wow. The future is way brighter than any of us have ever expected. And the amount of work that continues is unbelievable. In 2 weeks, this is March 1st. March 14th, 2022 is when CTM 2.0 was dropped on the community. What ensued from there was one of the greatest collective contributions I've ever seen. The hive mind. We're getting ready to do it again. I think that this March 14th, I'm not sure of the day of the week. I hope that it's, let's see, let me just check. And this is going to be like a fun Friday type session. It's going to be a very important one. Maybe March 14th is a Thursday. We got a new drop coming. The CTM kicker. Well, just be prepared. Be prepared. We're looking at the NASDAQ here, roaring in the bliss, right? Catching the summit with us, Ace. And it is an absolutely beautiful, beautiful thing. I want to talk a little bit about equity markets here on this Friday. So before we do that, let's check in what's going on with Bitcoin and the rest. And I mean, this ascent is just magnificent. This is unbelievable. Just look at this chart here coming from the all-time high, and it is almost now a perfect V. And then the price action on the right here as we're going just with these large vertical moves is just magnificent. Someone said the stream is not working. Andrea, the stream should be working perfectly. Sometimes on YouTube, if you go to the bottom right, there's a gear icon. You could take it off auto and that might work. But before I continue, like we're in a comfortable mood here. And before we go, I don't want anything to be missed. we just get some confirmation that we are okay here and clear to go? Anyone? 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 All right. All right. So, I mean, this ascent here is, I think, magnificent is the word, and let's see if I could. Let me see if I could just get it to line up with the last one. Look at that. This is lining them up from the April high, and I mean, it's uncanny. What you're looking at in the blue is obviously the price action that we saw when after that bull market breakout in July 2020. It took until about October for the resumption to begin. And I mean, man, the behavior is almost uncanny. Just looking at the lineup right here, right now, that little piece of price action we're looking at the screen. What happened next was the tiniest of pullbacks. Not even yet. Yeah, here it is in this area right over here. Let me just go ahead and make sure that we got the pointer on, and you can see that we had this little upward sloping consolidation before the next massive move to the upside. February was a fantastic month. After the launch of the spot ETF, we saw a little bit of a hiccup, and it wasn't a sell the news type of event. The flow of funds have been extremely positive, except for February 21st, which was the only day that saw any type of outflows. Last day of the month, leap year, February 29th, did see a bit of a bit of a little bit less. Were funds trying to, the last portion of the year get Bitcoin on their books? I'm not sure. I think that the first week of March is going to be very important for us to continue to track what's going on with those flow of funds. We are making, Michelle, we're making the leap from early adopters. Each and every one of you is an early adopter, and we are now headed towards early majority. We have seen it, and it's not black and white, and there's nothing black and white, and it shouldn't be black and white. And some people are like, well, the 4-year cycle's dead, and I don't know. We were like over here, if we didn't have a blow off top, we're just going to forget 4-year cycle. And then it was 3 months later, CTM 2.0, the mechanical edge was begun and was instituted. And that gives us the ability to know when to be in the market, when not, and on the right side. And that is just absolutely gold. You could see it in the equity markets. I mean, like so many people are left behind on this move. When I say people, I'm talking about money managers, fund managers. They don't believe. And you don't have to. If you've noticed, I have noticed. Have you noticed over the last couple of months, I've kind of backed away from, we always try to be really, let's say, on point with our macro view. And have you noticed that like I've backed away, rightfully so, and whether it's across the board, right? And the reason why is because, well, if I don't have, like, I want to say clarity, but I don't have a really strong idea, well, then the best thing to do is back away and not try to force yourself on the market. It doesn't have to make sense, right? And a lot of people that you would consider to be like macro voices, and the ones that are really good afterwards at explaining exactly what happened, but in real time, it's usually really messy. I think it's really important here, and this reinforces, especially in this environment where things might not make sense. Maybe for you they do, but for a lot of people they don't. And just underscoring the massive edge it is to be on the right side of the trade. That's what our strategies do. Now, I think it's really hard if you are just joining us and you're seeing across the board stocks, crypto, all holding like positions well into profit. You might have a sense of FOMO. I think you got to take a step back and be like, if I want to be able to achieve the things that these people around me are achieving, I think the first thing that I need to do is to really absorb what's happening here and what's going on. Maybe even forget trading for a moment, spend some time absorbing myself, and have that patience that it takes. You have to think the long term. A lot of people learn to think in the long term after they've been so focused on the short term and they've made a lot of bad decisions. That's a good thing, whatever gets you there in the end. I mean, Nvidia here holding open 56% into profit. You remember prior to the earnings, down 10%. I mean, who knows where it ends or what's going on the daily time frame, on the 1 hour time frame. Just going back into the market right now, taking that trade. Interesting deviation. We've seen it before on TSLL on Tesla, the 1.5 leveraged ETF. We're seeing it on Nvidia now, where this had an earlier entry than we did over here. They're using the same script. They're using the same script. FNGU also pushing that position. It's not the first time, and it's not going to be the last time. Let me just go ahead and add some data. And the thing is you just don't know when it's going to be, which is why you have under a 50%. Most of our strategies have well under a 50% win ratio, right? Here you're looking at 4-year win ratio 44%. FNGU, you expect to lose more than half of your trades. You never know which trades are going to go on being pushed. Look at this one over here in May. I assume, and I was going to come out to 2020, right? We were just talking about Bitcoin doing some things, similar price action to 2020. So is FNGU. Look at that massive move. Jordan, they were doing outright QE at that particular point. I know. Imagine trying to go ahead and navigate these markets with and I was going to say from an intellectual lens, but man, I mean, can you imagine the strategies we employ? Can you imagine the massive brain power that has gone in to the creation? I mean, on an individual basis, there's massive man hours. The dev team is sitting here now being able to run and putting in massive individual work hours, brain power. Now, to get to where they are and able to work freely, you go all the way back to March 2014. And then to get even to that place, that came from, work I was doing in 2006, 7, 8, 9, and so on and so forth. But the amount of collective brain power that has gone into is absolutely astonishingly. It's almost hard to compute. It's going to happen again, and we'll break up the sessions. What we'll have to do is our normal sessions, and then we're going to have to do work sessions as well. Either which way, whatever it takes. More on that to come a couple of weeks from now. March 14th, 2024 will be it all begins again. And why I say it all begins again, we have extraordinary talent in place, continuing to the pursuit of perfection on what we have here. Even these stocks that you're looking at over here, right? Whether it's Tesla, right? Tesla on the daily out of the market as it should after just you saw Nvidia FNGU pulling along in January. Tesla went short. I'm not trying to guess. I'm just following momentum. I wanted to check out what the 1 hour is doing now. Looking to attack here on the long side. Struggling to find a way. There was a thought there that I lost, so I want to come back to it. Interesting that FNGU is following that 2020 price action as Bitcoin is as well. And we were talking about back then there was QE going on. So we are going to talk about that as we get into the traditional markets in just a moment. But there was something here. There was a nugget I was about to uncover, and it eluded me. So I hope it comes back. I hope it comes back. And you can see that March 2020, I'll say March 2000, that 2020 price action we're seeing on FNGU is very similar that's occurring right now. You, me, or anyone else, whether it's on Bitcoin and or on the equity markets, have no idea when that will stop. Most people believe that it shouldn't be where it is now. And that's not now. That is going back, I remember, over here. People at this particular point, they thought that NVIDIA was just way too, before these earnings, had gone too far too quickly. Nice base. Do we do well during those bases? Not particularly at all. Let me show you, probably in drawdown over here. Let me start on August the 23rd. And let's just see this year. I think it's so important to have as much awareness as possible. So we got August, and I'll go before the next winning trade to January 2024. So, well, I don't need to because it's minus 3%. It's holding a 56% open position after that. But that's great. Don't you get it? Like, to go through a consolidation period, which is obviously where we do not excel whatsoever because we trade a momentum-based system, and to be able to be down 3%, there's nothing wrong with that. There's everything fantastic with that. That's great. Now, when I say March 14th, there's two things that we're going to be adding. We talked about it about a month ago when we went over all of what other quants in the field are doing and how they approach the markets. And almost like true to form, it's taking massive teams that work together. It takes them about 2 years to develop something that is, what they consider to be their best work. But then what they do is they overlay different strategies. And unfortunately, what we begin March 14th, and I say unfortunately, is not going to do that because it's going to be, I believe, on par with the returns that we do with our CTM 2.0 X strategies, but just in a different way. But I think at the same time, we were talking with Alexander yesterday. Maybe I'll work with him and whoever else is interested in a smaller group, and at the same time work on that mean reversion strategy, which during the summit team was also kind of the foundation of it. The framework for it was shared, and eventually during these periods we will be taking that 3% loss and likely turning it into a gain. I mean, there's so much, and it just increases at like a crazy rate, but that's okay. So when we're talking about the stocks here, like these stocks on the 1 hour time frame were introduced January 2023, which means they've been forward tested now for 14 months and continue to outperform. The daily time frame was in June 2023 that they were introduced. And that's much less, that's only 8 months, 7 months of forward testing. Forward testing is all that matters, as it is our back tested results that we deem to be our preferred candidates. Forward test extremely well across the board. CTM 2.0 now over 18, 20 months of forward testing. But these are just what I dropped out. Like, they haven't been by the community improved upon. There's massive room for improvement, I am sure. Now, it was brought up inside I haven't even touched it yet, Hypernova. Thanks for the reminder. And I think like where we left off, it's a little better than the 1 hour. So could we check in on that next week, Hypernova? Early next week, Monday if you forget Tuesday. And I'm gearing up here for the kickoff here of CTM Kicker. Massive effort. We did it before. We'll do it again. So Hypernova, I mean, it's not like any type of glaring difference. For example, if you look at the returns on CTM 2.0, this is on Tesla, and this is from 2023 to date. 43% return, 20% drawdown. It is definitely the laggard of all of our strategies. For example, if I look at FNGU, the first version released, that's during the same period, you know, 259%, yada, yada, whatever. And then you take the X versions, and the X versions are outperforming a lot, you know? And I don't think that's the case on NVIDIA. They're pretty close. So you could see that. I mean, that's a massive outperformance from this. Is that a leveraged? No, that's just, that's a massive outperformance compared to the strategy over here. I'm not seeing that on NVIDIA. So it just hasn't been, it's better, tiny bit, but you know what I'm saying? So it's just prioritize, and we have to continue to prioritize. And I'm sure that we could do even better, but it's nice knowing that since inception, that these strategies forward test like monsters. That's beautiful. Now that could change in the future. Right in the future, we could say very easily, like, this is the peak of the equity markets. If they drop down, you're fine. You're just out of the market. If they go into any type of bear market, out of the market, bear market, out of the market. Could you believe how priceless this is? Being out of the market for the whole bear market and not having to guess. And then, like, regardless of what you think, getting in the market on the turn, outperforming every other fund manager out there by a large margin. Sideways is not good. Sideways is difficult, and more mentally. Again, from this period over here, from August 23rd to this period, you're in a drawdown, a slight drawdown. It could be bigger. We've seen some big drawdowns in 2023 on crypto. Not so much big as lengthy. Cardano, 11-month drawdown, and then putting up a 92% return on the next trade. 11 months of not making new all-time highs. You have to be prepared. And if stocks were to do that, go sideways for an extended period of time in a tight range, that's tough, and that could happen. And anyway, I think the point here is that so many people are not like able to reason what is happening, and they get left behind in doing so. And I think that is a really good place to begin to get yourself to realize that it is the plan that you've developed. It's the strategy in place that is going to help you achieve the goals. People are just sharing with me someone that recently joined the community, some of the goals they have. They highly align with my own, as far as wants to make sure that his kids are in a position where they're not forced to work, and they could pursue, whether on an educational level or through career-wise, what they want to do. The second one, obviously something that we all have in mind, and creating that generational wealth. And we'll look at those when I can pull them up and read them with you. I want to continue going over here. And I hope that not with just the equity markets, but the same picture is painted over here as far as what is taking place through the crypto markets. And the reason I say that is because many people thought that we would have topped out a long time ago. I mean, I did too. If I think that right over here in October 2023, if it weren't for the grayscale ruling, I don't think that we would have bottomed at 26K. And I think that we would have been under pressure. And I think that even the bull market breakout trend line had a good probability of being tested. But this was one of the qualifiers we put out there. We talked about if we were to see some type of massive stimulus from China, if we were to see the U.S. reverse policy and move to outright QE, Or if there was a spot ETF approval, this is what ignited the spot ETF approval. This was the court ruling that no, Grayscale's got the go ahead. They could convert GBTC fund into a spot ETF. And then here we are today. You have to be able to follow what's going on, not just from a cycle perspective, but also you have to go ahead and big events like that, you have to know and understand and follow. Our position, and this is the lead into stocks. Could you imagine? But we're equities, but we're going good. We got a good pace going over here today. Which one is he? Someone's got to show me a picture. I love watching margin call clips like on YouTube. If I ever get, a moment alone, I love doing it. But I don't remember any actor's name or the character they play ever, except maybe Neo in Matrix. What's his name? Who's the guy from Point Break? So getting back to it though, is what we're looking at here is this is amazing. I'm loving. Do you see how close Bitcoin is to taking profit? Bitcoin over here, the buy side deviation is close to, if momentum just simply continues to wane, to locking in another banger. And it's beautiful. And it's not just on, these are our two most popular people trading. This is CTM 2.0. It might actually perform a little better during the bull market phases from the work that we've looked at. CTMX, outperformer over time. Both of these have been in sync with their positioning. And then we also have some other candidates over here. We have some people trade BTC 108 on the 8-hour. It is historically way more profitable than BTC 107. Drawdown's a little bit bigger, and the stop loss is much wider. You can see a 13% stop loss compared to 2.6. And then you have some people trading buy side only on the 8-hour time frame. And again, continuing here to crush it, and crushed it the best in 2023. And then we also have, of course, the daily time frame over here, holding a nice mere 43% open position in profit. That's awesome. Thank you for saying that. Appreciate that, Thurston. I mean, I just show up every day, and I kind of I just put the work in, and then all of us make the magic happen. I don't know. I'm not going to try to think about it. I just keep going. That's what I do. I just keep going. I just, that work ethic, that discipline, that even when things are hard, just pushing through, keeping everyone level, right? That's why I'm here. So we have Ethereum here continuing to hold that sizable position. Usually the longer you get to open trades, usually the longer they fall into profit. That's nice to see over here, of course. Caleb this morning pointing out, this is insane. I never even thought about that. This is cool. It's an insane stat that applies to trading. Djokovic is considered the greatest tennis player of all time since winning his 24th Grand Slam title. And imagine, poor guy, he had to play so many of his Grand Slams when Nadal and Federer were just winning title after title after title. And if they weren't in there, imagine what he would have done. He's only won 54% of his career points. Our best performing algos have less than a 50% win rate, closer to 45%. It makes perfect sense. You heard it before. Push your winners, cut your losers, find an edge, and master executing it. Cardano's trade now, finally getting ourselves into a little bit more of a comfort zone, 20% into profit. I say that because it has a massively wide stop, 20%. Average losing trade, even with that stop loss, is closer to 3.2%. You have to familiarize yourself with each and any strategy you are trading. You have to know how it performs in all periods. You have to live and breathe your edge. Largest losing trade, almost at the stop loss, 20%, 12.67. 20% stop loss, largest losing trade is 12 and 3/4. And the average losing trade, I take that back, is 2.5% for whatever data time frame I'm going back to over here, 2018. Solana's still on the sidelines, missing out big time on this move. I wanted to get into a little bit of discretionary view of Solana in how it's been pointed out by, I think Raul was the first one I know to point out how newer coins track the hype phase and then facing reality phase of older coins. And I saw Tech Dev comment yesterday how Solana is tracking Ethereum's last cycle performance. So I wanted to take a look at with you. Maybe we'll do that all on next week, but that stuff's just for fun. We're here to work. But yeah, Solana is on the sidelines here, missing out now on this run. I personally view it as, and well, right now we're seeing Bitcoin roaring in the bliss, making those new all-time highs. Ethereum now roaring in the bliss, making new all-time account highs. Cardano is roaring in the bliss, making new all-time account highs. By the way, as it closed here, was also on a closing basis, new all-time account highs. This is intra-trade. Cardano and Ethereum, they give back a quarter to a third of their open trade profits every single time. It's how they're able to go ahead and hold on to these positions, right? Where Bitcoin is quick to take these profits, they hold on to their positions. Each one is designed according to that asset's unique characteristics. Just as each asset has its own market structure, our clone trend lines that's showing the structure throughout from different angles, that is why they each have their own systematic characteristic as well. And what we try to do is develop a solution that is able to most consistently capture the best gains with the lowest drawdown. So you could see that upward sloping movement. It's happened before. This is a massive move. You could see that before the last entry over here. That was a 28% move up. You could say even a 47% move up before capturing that last trade over here. A nice 26%, 129% throughout 2023, 34, 13. Cardano 45 was just an absolute monster. So is it anything different than what happened last time? I mean, I guess it's just the way that it does its thing. I mean, like all of you, when you're seeing that type of move, I wish we were participating. By the way, in the summit meeting, actually, I think like 3 hours into the meeting, and I don't want to confuse anyone, but I have to get it out there, put it on the bookshelf. There's no other way. And we were talking about something that Zuzu had first introduced, and Solid Pepper went ahead and drew a diagram of, and I think it's called the Naked Short, and it was designed for people who are trading on the buy side only. David, you got to take a look at this, because go through the Discord, search Solid Pepper, and then either go through all his posts or find the image shared, or Ace, just message Ace, and Ace will be able to get it to you, because it complements the buy side boost beautifully. Putting that with the buy side boost together, the whole nother level, I think. But along those lines, so what that would have you doing here is basically, just to keep it really simple, I'm not trying to confuse anyone. Every single person in this community is at a different level. And that's how it works, including myself, And, I've heard it said before, if you are a bucket full of water, you're full. If you're a thimble full of water, you're also full. And it doesn't matter. The virtual short. And thank you, David. You got to get on that. And that's the whole thing. By David working on that, with whoever else he's going to be like, then it becomes something as with the buy side boost that the whole community benefits from. So if something that's being said is just like you can't relate to, don't worry about it. Like you will at another time. But so for example, on this move on Solana, where we started buying, right? Virtual short is that you are always on a buy side only account, you're like always in the market at a 50% level of your capital. If you go short on a position over here, you see shorts, you're down to zero. You're just in cash 100%. So short trades, you're in cash. If you're not in a short trade, you're at 50%. And when you're in a buy side trade, you're in at 100%. So you could see how for this whole move on Solana, you would have at least had a 50% allocation. Now, I imagine that the math is going to get complicated, including the buy side boost into all of that, but it's likely very important, you know? So I just want to go back and look at one thing and find out the tough part to look through, because this is real. This means, for example, right? So I just started in 2022, January. So where it's red, you're out of the market. And then when it's not, you're 50% allocation. And then this would have been a nice gain to capture, by the way. Helped you out for all these, because you're losing money when this is in gray. Like this drop over here from 133 to 113, that nice 20% drop, 15% drop, you're losing money, right? Now, I can't think of, maybe you gained it back over here on this move up, but you're losing here, you're losing here. You gain a little back over here, gain a little bit back over here, but you gain a massive amount through all of this, because on all of this, even when you're out of the market here, these are gains. All right, so that I mean, again, that is so important. And then the next thing that we talked about, and then I was looking for 5 minutes this morning, and we'll be able to improve upon that. But you could also see, and I'm just trying to share some of the things that I don't do fib lines. I don't. The only retracement fib I use is 0.786, and that's awesome. Like in a fun session, we could do that, but we're working, and the only way that we have the plan in place that we have developed is through this work, But that, you know what? That's awesome. Going, I don't know if you're looking on the Bitcoin chart, the Solana chart, but if you go into, we have Bitcoin, Ethereum, and altcoin channels. And if you go into the appropriate channel and then you ask someone to draw a fib, for sure they'll be able to do that. That's a great way for everyone to work together and have those fun. It's not that I'm not a fun guy, but we got a team to lead here. Got to be about business, And so another way that maybe that works is to prevent yourself during that bear market. So picture with me that you see this red line over here, the sell side deviation. Let's say, for example, and you'll see it in when we begin introducing the kicker and do all that work. I'm not trying to lose anyone, but this stuff is so important. I want to get into the equity markets. That's been the whole goal of this session. But I think that this session has been super solid. Probably the best one of the week, even though we had those fun public sessions and whatnot. But the value here is immense, and we just got to keep going. Do you see this red line over here, the sell side deviation, and how it stays up for an extended period of time? So for example, if you were doing that, the naked short, what do you guys call it? The virtual short, money management. So you're holding, as this goes above the zero line, you're holding that 50% allocation the whole way, right? Until it stops. Now picture this red line was developed, it's not right now, for the short side. And now this green line was able to be holding down below because it is on the kicker. So I'm not trying to confuse you, but then that would, for all this period over here, that's where we're protected from the virtual short. So actually we wouldn't have a 50% long allocation here. We would be kept out. So that's just an important note. And bravo. I mean, I hope that someone here listening could appreciate that. If you're using leverage and margin, same thing with the buy side boost. Buy side boost, I likely could be done also with the short side in mind, or you could use buy side boost on the long side and then trade the short side with margin. And Michelle, 100%, but same concept, 100%. But the norm will be with no leverage, right? That's how we work it out. So anyway, that was a lot of fun. I enjoyed it, and very important. Let's move over to equity markets and take a look here as the NASDAQ here is just pumping and pumping hard up here, up 1.23%, almost not stopping here. New all-time high, looking beautiful. And I do think that it has eluded many people. So let me just go through and find the groove over here. Dollar, that probably needs to be readjusted. And so let me just 1 second, please. Let me just. I don't even know. I'm going to go there. How it used to be done would be something like this. Right now that stop has been taken out today from that high. Oh, the high is all the way up here, but anyway, I digress. So much work needs to be done, David, and you have to just go on pause. Like first learn about it, then kind of learn about it, then come on the back shelf and put it on the side, because for it to work, it needs to be, and the kicker work will solidify it in a mechanical way when we go ahead and we start working on the kicker. The kicker is basically just a separate strategy. We have CTM 2.0, CTM 2.x. That we have an extraordinary amount of talent who continues to work for the pursuit of perfection on it. What we have in place is absolutely elegant. And so, but David, so there'll be times when it's being used and times when it's not. So that you just need to also be patient a little bit until we get to that stage. But it's important to begin the process. And then NASDAQ here running high. S&P 500. I want to start off with this, and I just posted this cover yesterday from The Economist, and they're saying, how high could markets go? And it looks to me that they're saying that the market doesn't belong this high and that the market is being held up by these helium balloons. They don't really have the best track record like Barron's. And you could see right over here, they called the exact market bottom when they called crypto's downfall. Now, my own personal opinion, I don't know if you agree with it or not, but someone asked me, what do I think about that? What do you think of The Economist? And I said, I think it's a Davos crowd propaganda outlet. So the question comes up, well, then what are they trying to say here? And that was not my line of thinking. Maybe it should have been, but my line of thinking was that they're saying that this market is fragile and probably has gone too far too quick, and that soon it's going to pop, and the bull will. That's what I think they're saying. And then what I'm saying is, well, then maybe we still have likely some time to go. Now, I have been waiting for and noticing as we look at the election year season pattern on the S&P 500 that we have been overextended. And in the green line, you're looking at the most bullish seasonal pattern. And that comes in when there's a sitting president running. And right now we have a sitting president running. I don't know what happens by the time of the election. Maybe we come to an open field, but we're not in an open field right now. We're into a sitting president running. And, we are definitely outstretched, but usually by the time we last look at this into the end of February, we've seen some type of pullback. We haven't seen that. We've seen just a further outstretching. And likely or historically, what has happened from here has been a little bit of pullback. And, is that going to come? I don't know. It hasn't happened yet. We're stretched far. I continue to be cautious, but that comes back to having a plan in place and being able to withstand the portions of the drawdown. It's not the 3% drawdown. And it probably was max more than that over here, right? Because you had over here, I see 4%, 6%. I can't get it. I'm trying to, but I don't want to fade on you. Point being is that it's not the extent of the drawdown. It's the time that wears a lot of people out. You're going 6 months in drawdown running sideways. You're going from August, September, October, November, December into finally taking that position here in January. That's what most people can't take. And that's why they get left behind. We don't want anyone left behind. We want everyone to summit with us, which is why we go over these different dynamics. So we we could see a correction. Normally by now we have seen a correction, but the market's going up. And that is why having a systematic system with an incredible edge is everything. I'm coming back over here and I want to look at going back to what we were talking about. And then it was pointed out by Wes, just building off of that. And he's like, look, I think what you said is correct. But if the S&P were to fill that recent gap, I think we might want to reconsider. Meanwhile, everything seems fine until that happens. So I wanted to take a look at where that is, what that's got. So it's been forgive the chart. We don't focus on the S&P 500. Nevertheless, it's high signal, right? What do I mean by that? Well, when we finally had the breakdown, this part was hard, by the way. This part was really hard. But finally, the breakout, it wasn't until the piercing of the red line that we had the first sell impulse. And upon that impulse was the last that we did any work on this. And it was through our structure of the market, finding that flag, and then when it broke above. Right? But if you go ahead and I want you to see, first of all, one thing. I want you to, before I get to the gap, I want you to see, if I just borrow this line for a second, the structure of the market. I want you to see how it continues to be in play. So I'll start over here. And if you could train your eye to see barely finding support here, but resistance, peak down below, support. I'm going to move it up over here to the top, right? I'm noticing that we have the touch over here, the touch over here, the touch here, the touch here, the touch here. If this were to break, that might be the first sign that we are going to be seeing an underbelly break. And I'm just going to move that line up one more to the touch over here. Only because we then have a touch here. It's the structure of the market, so it repeats throughout. But that's the last touch over here. That's where the market's paying attention to. So that would be the first sign or the earliest opportunity for a counter trend trader to take a look at trying to find a move, so long as you could get back on the right side on the next impulse. And then I think that taking this line over here, and now, I don't want to take them both, and putting it off the bottom on one touch, because one touch is all you need, always. That would be where we're seeing something of high concern. And here's the gap Wes is talking about, I think, of just above 4,600. And Wes is saying that, you know what? Let me just go to the weekly. I'll go to the 3-day. I think we're in good shape until, as long as we're above 46. And if you look at Wes's awareness and you look where that trend line comes in, I mean, price would have to come screaming down by May, by May in order for that line to be breached at the same time. But I think that is pretty strong point of awareness. That's a massive pullback, by the way, between where we are now and let's say that we came down by May into it. That's a healthy correction on the S&P 500. Seasonalities point to potentially there could be some coming into the end of April, middle of April, maybe when people get their refunds. See it, but right now it's running up. So that's where the CTM strategy comes into play. As long as this reaction is typical, Bitcoin has a chance to become embedded overbought condition. Not saying that it will necessarily, an extremely bullish event. Gary Savage is a gold axe. And in the last bull market, starting in before 2010, the gold market marched to his orders. He was a 1984 Olympic team and holds many U.S. age group weightlifting events. So he performs on an elite level. He's saying when sentiment cycles back down to this pessimistic level again, I'll try to trade Bitcoin, but I'm not going to chase it with this rally, with this sentiment. A lot of people are attracted to it now. A lot of people, maybe rightfully so. I mean, the RSIs we looked at yesterday is at 88. Excessively bullish and price stretched. For those that are patient and can delay gratification, there will be a time and a place to buy Bitcoin eventually. But bringing it back to having elegant strategies in place, I mean, Savage would have been better off on the daily time frame here on Bitcoin. That's all you need. That's just absolutely all you need. But Wes, that's great insight in so much as that, look, a lot of people think that we've come too far too quick. They're not participating. And this could be one of those times where we see overbought remain overbought. It's happened before on Bitcoin. And it seems to be tracking with a lot of similarity again right now. Again, our advantage is it doesn't matter to us. Our advantage is we know when to be out. And that right there is priceless. Knowing when to be in the market, when out, and on what side. So that is our Friday session, our fun Friday session here at CTM. And we got, as always, a massive amount of work to do going forward, as it should be. Wanted to check in over here on oil breaking above some horizontal resistance if it closes there above today. And oil going bid. I mean, I see lots of things that are saying perhaps equity should be under pressure. The dollar helping today. Yields are off today too, helping. Coming off of today's data, today's PMI data, again, coming in really poor. And, you saw our expectations for a rate hike into June. Markets, interesting. pricing in now only a 25% chance of a pause. We're pricing in the first cut a little bit stronger now into June. Let's go ahead and just check the calendar, what's coming up next week. And we have first Friday of the month, non-farm payrolls. I imagine a really strong or a really weak number, a surprise, could definitely have a strong opinion on when that first hike is coming in. By the way, we do have earlier in the week, we have JOLTS job numbers, we have ADP. More importantly, or maybe not, jobs numbers are pretty important going forward. We do have Powell testifying on Wednesday and on Thursday. And then we also have Bank of Japan and ECB. It's a big, big week next week. And likely by the end of the week, we will see current predictions for first rate cut coming in or priced out. Who knows? But what's interesting here is that Powell has given the time frame of the first cut is coming by the summer. It would be a surprise to me if that were to become off the table. But again, we've kind of, over the last couple of months, rightfully so, stepped back from that at the right time and have been focused 100% where it matters. This is something that if you haven't seen it, I would go ahead and take a look at. And you're talking about the move on gold taking place. I didn't even get to see a price on it yet today. Let me go ahead and see it. Not gold at, wow. Look at this beauty. Ooh, wait with me 1 second. So we're going to continue this Fun Friday here. And I want to pull up a very important chart. I hope I have it. Here we go. Let's see what we got here. All right, let's bring it up onto the big screen. And we got the gold price. And well, that's interesting. So I'm looking here at September 11th, Operation Twist. And that put a top in gold. Why I bring that up, why I say that is this morning. Remember we talked about Thursday and Friday for events on the week. We had mega Fed speakers coming out. And now we have Christopher Waller quietly dropped a bombshell on markets for those that were paying attention, specifically remarking on a Fed paper, quantitative tightening around the globe, what we have learned. Waller told the U.S. Monetary Policy Forum in New York that he would like to see two developments in the Fed's portfolio. First, I would like to see the Fed's mortgage-backed securities holdings go to zero. I don't want to hold those things, right? And second, I would like to see a shift in Treasury holdings towards a larger share of shorter dated Treasury securities, but up to longer dated. So they don't say that. It says toward a larger share of short dated Treasury securities. Prior to the global financial crisis, we held approximately 1/3 of our portfolio in Treasury bills. Today, bills are less than 5% of our Treasury holdings and less than 3% of our total securities. Moving toward more Treasury bills would shift the maturity structure more toward a policy rate, the overnight federal funds rate, and allow our income and expenses to rise and fall together as the FOMC increases cuts and targeted range. Translation: Waller is hinting at Operation Reverse Twist. Okay, that's where this makes more sense over here then, because this is not Operation Twist here. We're talking a reverse twist. Okay, so that might be why gold is responding very favorably right now. As the headlines suggest, gold and bonds soar. Equities too, loving it. And as a reminder, the Fed released Operation Twist in 2022, selling short-term treasuries and purchasing long-term. He's hinting now of buying the short-term, which is the reverse Operation Twist. Why much chatter has been about the tapering of QT. They will, of course, not call Operation Reverse Twist by its proper name, QE, because that would ignite animal spirits further and put the Fed in the awkward position of buying short-term bonds at the same time it's hiking rates. Boom, 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 boom. His comments come as Dallas Fed Lori Logan reiterated it's likely be appropriate to start slowing the pace at which it shrinks its balance sheet. Quantitative tightening about to be tapered. Seems like we're getting ready for, during this 2024, a lot of fireworks. And it looks like, sure enough, Bitcoin has been sniffing it out and front running it the whole time. All of which is promptly timed at the pace, the reverse repo erosion. We only have 36 people in here. I hope everyone has a chance to watch this on the replay. It is amazing what we get to share here together. Is set to accelerate after month-end malarkey. The Fed's BTFP facility set to expire. This was also pointed out over here by ID. He pointed to this tweet over here. Ed Bradford, tomorrow will be the big day. There should be a huge drawdown post-month end in the reverse repo drainage. And you can see right now, expecting potentially even a $400 billion drawdown, taking us very close to the fat line, just as the Fed is now getting ready to do two things: begin buying short-term treasuries, as well as taper quantitative tightening. That if they continue to pull this off and this cycle continues running out longer, that is why we are seeing these risk running here. And if you did make it to the end and have not yet hit the thumbs up, please go ahead, smash that like button, share the love. Have a beautiful weekend, everyone. God bless you. Lots of love. I'll talk to you on Monday.